You're paying off your mortgage the slowest and most expensive way possible. There's a better way to pay off your home, and you can even do it in less than 3 years. Make sure to save this video. I'm going to show you how it's possible. Just got off the phone with this client that's thinking about refinancing their primary residence. They owe about $488,000, and he's got a 2.5% interest rate on his current house. The number one problem I see with home buyers and homeowners today is you get so fixated on the interest rate. This guy didn't even want to get on a phone call with me, but I eventually got him to get on because he's so in love with his 2.5% interest rate. But watch this video to the very end. I'm going to show you what we did to his mortgage. Between him and the wife, they deposit about $16,000 a month. They also have about $200,000 that they're liquid in, and I'm having them move that money onto the Heloc as a deposit. Now, the reason why we move that money into the Heloc is because the amount of interest that we're going to be saving outweighs the amount of interest that he makes in the market. So let's keep watching this video, and I'm going to show you how much money we're saving. After he pays all his expenses for the month, he's got about $8,000 left over. Remember, the Heloc works simply as your checking account. You got all your income going in, you're gonna pay all your bills out of the Heloc, and any excess money that's left over essentially just lives on the Heloc. You have access to this money for 30 years, so the money's not tied up in the house. You can put the money in today, you can take it out tomorrow. Here's his current mortgage. He's gonna pay off his mortgage in 26 years with his 2.5% interest rate, or we take a look at a Heloc. We're paying it off in 34 months, saving him $136,000 in interest. He'd have to be getting at least 25% in the market in order for that $200,000 to make sense staying there. That's why I'm having him move that money into the Heloc. We're paying off the home in 34 months. We're still paying back about $39,000 worth of interest back to the bank. That essentially gives us an effective APR of 0.5%. Our home's completely paid off in 34 months. You can see right here. We owe absolutely nothing. He now has access to this $488,000 in the form of a line of credit. Meanwhile, if he were to stay in his current 2.5% interest rate, he would have only paid down $39,000 and still owe $448,000 on his mortgage. I'm telling you, you guys have to understand this strategy. If not, you are only making the banks rich. They want to keep you in debt for 30 years. What do they care if they give you a mortgage at 2.5%? They want you paying them back all the interest. If you could pay your home off in 3 years, would you do it?